Today, we're going to look at a scalper that is killing it every single day. And we're going to see how that trades. And as you see right now, we're in a short live and it's about working already. So for a little bit, I'll cover how we're going to trade this and then how, a little bit how it works. Obviously, I'm not going to show the source code, but like how it works. And then we're going to trade it live. And this is something that you can trade essentially for the entire day. Whenever you feel like it, you can sit down, you can trade this. And as you can see, this has been the past like month or two. It works well. If I put this to deep back testing with all the data that we have, it's going to look pretty good as well. Now, this is with the entries and exits that we have on TradingView, which is a very, very limited platform to, do backtesting or anything, right? So there is zero risk management. There's none of those things are here, right? $173,000. That's pretty good. If we look at the buy and hold equity here, we're actually obviously it's still outperforming us with the Bitcoin, but it's not that bad. So this is going to be a pretty good overview, and this scalper by itself is something that I've been trading probably 20-30 trades a day, just as many as I can whenever I have time, and just been trading it and just to get a feel for it so I can show it to you guys, and it works. Now, a couple things to note. Number one, the exits sometimes might be too early because it's made conservative, because without risk management in the back testing of this thing on TradingView, which is again very, very limited, and I don't love it at all. We usually just do all our indicators and everything custom, but for the simplicity and for to make sure that you guys can see and use the scalper as quickly as possible, we have it here right now. We're probably going to integrate it into our system and into our dashboards pretty soon. So one thing that we need to note is that the exits might be too early. So we can look at the stochastics and see if there's probably still some juice left. And the other thing is understanding pretty much how the scalper is working so we can manage it correctly. And when we enter the same way as we enter all our trades, right? Which is the same way market makers do, which is the same way as layering. So we make sure that we layer it in. For an example, if we have an entry here, as we did right now a couple minutes ago, as we have an entry here, what we will do is we will do a short at the open of this candle, and we will look at where the next possible stop loss is, and based on that we will layer in our shorts, and we'll make sure that we hit some orders as we go towards our stop loss. The stop loss on our trades by default is 50%. That's what we have in our settings right now. So that's what the stop loss is for the bot by itself, and that's something that we can work with. However, if there are some close levels above and below, then we're going to work with that. And yeah, we want to make sure that we fill it. In this case, if we had layered it a bit higher, we would have a fill probably somewhere here. An average order is probably somewhere here. Right, so that's that. We'll look at the 5-minute stochastic. Another thing that we're going to look at in order to get more detail, right? We're not going to trade the bot there, but we're going to look at it to get more detail, is look at the 1 minute. And as we go to the 1 minute, we're looking for it to bottom out, essentially, or really turn around. And whenever it turns around, then we exit. Because what is the trade? What is the strategy in the scalper in the first place? It takes a couple of rule sets and parts of strategies that we have been developing for a while, puts them together, aligns it together with other stochastics. Those are our entries, and then it looks at lower stochastics levels to exit, essentially. So based on our 5-minute and on our 1 minute and also our 3-minute, we will see how much juice there is in a move, and based on that we'll manage that trade. The 1 important thing is that we make sure that we layer our entries as well in order to get the best possible trades and best possible deals. So right now, as the 1 minute is turning up, especially in the move upwards, we would be exiting here already, and just like that, in a couple minutes, we'd have another profit. We could have like our 5 and 3 minute are obviously still topped out, so there's still a lot of movement here. The bot is still in, but I would encourage everyone that is trading this to be more conservative at the beginning, and then once you get a good feeling about it, you can be a little more aggressive. The amount of trades per day, so on average we're in a trade for 6 bars. 6 bars on a 5 minute is 30 minutes. So on average, every trade takes 30 minutes, and the amount of trades within a day, we can look 24 hours from this point on. It's gonna be a while right here. So you see that there's plenty of trades. If we counted 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, so like 30, 40, 50 trades, depending on if we range or depending on the day. So yeah, basically whenever we have a signal entry, long or short, that's what we'll do. We'll do it with our risk management, with the same risk management that we use for any other strategies. Now probably we'll have a better move down, and if we are, if we look at the different time frames, and we might see some alignments here with our higher time frames being topped out, then obviously we might have some more room to the downside, especially with our 50 and 30 minute being topped out. So this actually would be a really, really nice short here. We can also look at previous trades and look at them in detail. As you can see, for example, this short here, we have an exit here, right? But in this case, the 5 minute is still going down very well. The reason that we exited here is because the 1 minute started bottoming out. But even during that time, what is this? 9:40, December 20th. 9:40, December 20th, we bottomed out on the 1 minute. 9:40 right here. So we bottomed out right here, and we were bottomed for the entire time until we went to the level here. So really there's still some room usually for the exits, and another version will be looking at the direction of the stochastics as well in order to improve this. But yeah, so that trade, for example, you can see how usually there's some more movement left in the moves. Same thing here, entry at this top, and as you can see that the tops and bottoms where we enter are usually pretty good, and there might be some movement against us, but in a range like this, like we just had today, you see how it works really beautifully. We have I can just go as far as I want. We have a short with a short exit. This was within 5 minutes, right? And we had our scalp trade right here. Then we had another short with another exit that was a bit earlier. Could have technically held it to the bottom of the 5 minute. Then we have a long, same thing, exited earlier, could have held it to the top of the 5 minute. Then we have another short, could have held it to the bottom of the 5 minute as well. Had another long, had another short, had another long, had another short, had another short, moved up, had another short here. In this case, we would have either, let's see what the 1 minute was doing here, but whenever the 1 minute starts going down, we would put our stop loss to break even. But even here, we can say, okay, we hit a stop loss at 0.5%, which is right here. And then we had another short as we're going up here. Also, whenever we hit a stop loss, we don't trade that move, we don't trade that direction until we get a long. And the reason we do that is because the time when the strategy can lose, and as you can see, like there are some times where there are some losses here in the simple backtesting, But really that happens. It wouldn't happen when you trade it manually, because that happens when there's a stop loss and the move just continues to go up. So in this case, at this point, we topped out our higher time frame, so the short actually makes sense. Where for simplicity's sakes, we didn't even have to take the short, just wait for a long. But when we hit a stop loss, what that means is that we have a breakout of our range. And because we're trading a trend reversal strategy, as we've talked about in many videos, when it works is when the trend reverses. When it doesn't work is when it breaks out. So when it does break out, when we hit a stop loss and it's our confirmation that it broke out, we want to wait until we get to the next range. And how do we do that? Well, we will wait until the opposite side trade happens, because at that point there is a chance, or a pretty high chance, or by default you should be established in a new range already. And as long as you follow these rules, first of all, you layer in, you look at details on your entries, because there's many trades where you could have pulled much more in your profits. So this result here is very inefficient in profit taking, and also losing much more than it should have, because for some reason the stop losses are sometimes just too slow on TradingView. Another thing, like whenever we have the time, we will implement it into our internal backtesting system right away. The same backtesting that we do for investors and our dashboard strategies, and then then it's going to be exact, like to the millisecond and to the fraction of a cent. But other than that, it's pretty low. So the performance actually worse, quite a bit worse than it would actually be if you trade it manually on this little backtesting sheet here. So yes, this is what we're looking at, and we're waiting for another trade. Essentially, we're in a short here right now. Would have taken some profits already. But especially in a move where we're going up, and this is a time where we hit our stop, when I hit the stop loss after a long time of just trading the range. And this is really what you want to do, like trade it during this time when you see that something's just ranging, Bitcoin specifically, because we're trading this on Bitcoin. When you see Bitcoin is ranging, this is the best time to trade it. You can literally just sit back, relax, and just pop these trades one after another. And within say a couple hours, within 3 hours of trading this, you would have traded 1, 2, 3, 4, 5, 6 trades. So around 2 trades an hour. And you could have held them much longer, and every single one of them hit. So yeah, a pretty good scalping method, especially because the calculations and the computations are done for you. All that's left to do is risk management, and then also trading this. Even if you were trading this on a demo account, right? But trading the scalper and having a lot of trades where you need to manage risk, right, will improve your risk management and your overall trading performance on all other trading that you do at all, because you just get so many repetitions and so many trades and tries to manage risk, to trade, and you get that into smaller moves, right? So obviously, yes, you can trade at a higher leverage here, assuming that you risk 0.5%. If you wanted to, you could go pretty high in leverage if you were to risk 10% per trade, but I would not do that, especially when we have a scalping strategy where we have many trades in a day. I would maximum risk 1 to 5% per trade, 5% being a lot already. But if you're aggressive and you want to build up an account over a couple days or hours or whatever you do, right? No, not financial advice, but if you wanted to, then you can probably risk a bit more, but then also you need to make sure that whatever you risk, you're willing to risk and are okay with the possibility of losing it. But But yeah, so now we're just in this trade and waiting for this to play out. Really what's going to happen is we will need this 1 minute to bottom out, then we'll exit. And as we exit, then we'll have we would like the 5 minutes to bottom out. As the 5 minute bottoms out, we'll have another long trade. In case it doesn't, and we will go back into the top category, well, that just means that we have a continuation of a trend to the upside, which is a suboptimal time for us to trade. So after this short that, we're in the profits, we would have to assess what's going on for the next trade. By default, for a beginner, I just wouldn't trade shorts here and until we get a long, and then we're in a range and then we're trading. As you can see here, we're not really in a range, we're going up, and what we're trading here are retracements. That is fine, but where the strategy really excels is at the ranges. Now this is something else that's important here. So let's look at this trade. Let's assume that we were in this trade, entered here. Then we have an exit at essentially the same price. So were you profitable or not on this trade, or break even? Well, if you risk manage, you were actually profitable here, because what you're going to do is you're going to enter. You're going to set your take profit and stop loss, whatever it may be, but you layer in. And as you layer in, what's going to happen is that your average entry is going to go higher and higher and higher to a point where the exit of the trade is actually relatively far into profits, because you risk managed and because you layered in. And that is something that we trade on swing trades, on basically any trades that we do, right? A bot is not as great in doing that, at least on TradingView. If you had a little bit more calculations and maybe some simple AI model, it will be much easier in layering in. But for the simplicity of the signals, we don't need that, as long as we know that we need to manage our trades. But essentially now it's just this trade, and we're going to wait for another short or another long. And as we go through these trades, it's important to know the few rules. Here could have been a take profit depending on what so right here, perfect, right? So right here, when we look at the 1 minute, we just about touched the bottom and it exited, right? So when we look at this, we look at the 1 minute, even though the bot didn't, this would be a clear exit here. So, or at least a take profit. But whenever the bot hits a stop loss, that's when we wait to trade again until we have confirmations. And other than that, we just trade. Other than that, we just trade the ranges. And even if you didn't do these rules that I talked to you about, you would still be fine. But the difference would be between this performance and 5x the performance. So that's why it wouldn't hurt to add in those rules if you understand them. So that's all, and now we're just waiting. And we had this overall is a good trade on not just on a scalper, but on this stock strategy and other thing as well. I can probably add in the porcupine indicator and see the scores. And yeah, actually, as a matter of fact, we also had a short signal here on the overall scores on the porcupine, which means that this actually was a confirmation across multiple strategies, which that is something that you can trade as well, is confirmations of multiple strategies, which is one more extraction above. And what that would basically do is give you more higher probability trades. So as we trade this, we can also look at other situations and other trades, but just by default, assuming that this bot is a standard trader, which by the way would Probably not happen because they wouldn't have the strategy. Let's remember the 3 pillars that we have in order to get consistent, right? It's strategy, it's mindset, and it's risk management. And you need to understand all of those. So number 1, why do you need strategy? Well, obviously you need strategy because when you go into the market and you are exposing yourself, right? You're dangling your feet out in a blue ocean, nothing around you. You're exposing yourself to risk. And if you don't have a clear plan on what you're going to do, then you're, just randomly doing stuff. And you are like the default outcome, the most probable outcome by far is for you to blow your account. That is just statistical evidence. That's just the truth. That's just what it is. So if you don't have a strategy and you don't have a plan, you are setting yourself up for big failure. Not just failure, big failure. And whoever has been trading before and whoever started trading, whoever was trying to learn trading, you know what I'm talking about. If you don't have a strategy and you're trying to wing it, sooner rather than later, it's going to bite you in the ass. So that's number 1. That's why we need strategy. Number 2 is we need risk management. Why do we need risk management? Well, we understand the strategy, right? And the strategy is working. That's great. But even then, we need to understand how the market works and how the percentages work and how we can enter a trade and always be positioned to be on the advantage side. And that's something very important because we are playing a numbers game and we're making sure that there's a lot of trades coming. And we're not, we're going to be alive for another week, right? We're going to be alive for another 3 weeks. I would hope so, right? We're going to be alive for another year. So as long as I'm still trading in that time, I need to, and assuming that I'm trading a strategy, I need to take into account the performance not of just my current trade, but also all my future trades. Because I'm not just trading one trade and I'm never going to trade again. I'm actually going to be in the market for a while. So you're not looking at one trade, you're looking at a basket of trades. And anytime you look at your performance or you backtest or you try to analyze your performance, you cannot look at one single trade. Obviously, you need to look at multiple trades. The more, the better, right? So that's why it's very important that over a long period of time, every single trade that we enter, we are at an unfair advantage compared to most people. Why? Because most people are going to lose money. So we don't want to be even close to most people, right? We need to have a big advantage. First of all, we have the strategies. That is an advantage by itself because, it's strategy that has been developing for a long time and it has a lot of backtesting data and it's based on core market principles and it has good entries, blah, blah, blah. That's number 1. But then also, we understand the market. We understand that we're trading ranges, and because of that, we can understand what our risk is, where we can put our stop losses, how we can layer in and make sure that our risk to reward is always the best risk to reward that any trader has in that move. And because of that, because we do that consistently for a lot of trades, for a large number of trades for a long period of time, we will end up being consistent. Because if anybody is going to be consistent, it's going to be us, right? So we want to position ourselves into a place where just by the simple daily actions that we do every single day, the outcome is inevitable, and the outcome is the outcome that we define it to be. How do we do that? And then, this really applies to anything in life, like whatever you want to do, okay. So I want to do X, right? I want to be consistent. I want to make some money in the market. Okay, so what do I need to do? Well, I have the 3 pillars. I have mindset, strategy, and risk management. Okay, so as long as I master these 3 things and I apply this, which is, by the way, it's not rocket science. I apply this every single day. Every single day I apply the same thing and I don't change anything. I just do the thing that works all the time. Then the logical outcome is your success, meaning you reaching the goal that you set for yourself. And the reason that is happening is because you put together the plan that is logically sound and you are executing that every single day. So if you were trading this every single day and you had an understanding over all three pillars, risk management, strategy, and mindset, then you would trade correctly. See what's going on with our trade. It's looking pretty good, and now we exited our trade. Could have been early, right? Our 5 minutes is just dropping, so being in, definitely taking profits, but being in with a little bit left, we would just let this ride out until the 5 minute goes down. But overall, good profit. I'm pretty sure that I started the recording before this trade happened, so we could see the entire trade play out. I'm pretty sure, not sure yet. So yeah, back to the three pillars. Strategy we just covered, right? You need a strategy, and that being a day trading strategy, a scalping strategy, or a swing trading strategy, whatever that may be, whatever fits for your goal, right? It's number one. Number two is risk management, because in the market, we need to understand how market makers are trying to trick retail traders and not only survive that, but make it to our advantage, which by itself will go back into us having an unfair advantage in the market. And then number three is mindset, or really emotional management. And what that means is that you have your strategy, you have your knowledge, and you are the connection between your trading account, the market, and yourself, and your bank account, right? So between your bank account and the market is you. So it is your responsibility that flow of communication is done without any interference. What is interference? Emotional triggers. So by your mindset and having a sound mindset and understanding what is going on in the market, and understanding the market is trying to emotionally trigger you, and being prepared for that, you allow your account and the market to work seamlessly, because it goes through you, but you don't put in any of your own interference. The work has been done, the strategy is there, the knowledge is there, the risk management is there, the market is there. All of that is there, and nothing was rocket science. Now it just needs to flow. So you are the connection where it flows through. So your responsibility then is to just relay messages from the market to your account, to the knowledge that you have, right? Without any emotional interference. So that's what you're trying to do. And those are the three pillars. So if you have a strategy that is sound and that is working, that is proven to work, and that has, many logical factors why it works, number one. Number two, you have a clear understanding and knowledge about risk management and how people can mess around with you in the market, and how you take it, how you make it into your own advantage. And then number three, you don't put in any of your emotional interference or emotional triggers between you, your account, and the market. And as long as you do those three things consistently, day after day after day, the outcome will be consistent profits. And it doesn't matter if the sun shines or it rains or it snows or there's war, it doesn't matter. You're consistent, you come to the market, you know exactly what to do, you do the same thing over and over, and even if it's boring, which by the way, it should be, right? When it's boring, it means that your emotions are not triggered. That's why it feels boring, because nothing's going on. But if your boring is consistent results and making money consistently, then that's the best boring it can ever be, right? Boring in the market is good. If you're excited, then that by definition means that something happened, an event happened that you did not expect, whether it's positive or negative. And that is bad news. That's a very bad sign. So all of these three things, right, including the emotional management and the risk management and the strategies, doing that every single day consistently will leave no other outcome other than success. Now, when we say, okay, well, that has been easy, why isn't everyone successful, right? Well, even if you understand this, the main problem happens is that, people hear it, they might not understand it, and then they, go into the market and they trade, and, day one looks great, day two looks great, and so on and so forth. Maybe a week, 2 weeks, doesn't matter. But then what happens is that they deviate from the plan. That is literally the only thing that can happen, right? So let's assume you're manually trading and you risk 10% every time. And you've actually been doing great. So you actually haven't been, hitting your 10% stop losses like at all, right? Maybe you've won every single trade for the past 2 weeks. That can happen. It happens to me, right? It can literally happen. It happened in the strategy too. Like you saw a pretty good chain of trades just doing well. So at that point, you might, your mind can trick you and tell you, oh, okay, well, this is actually invincible, right? Like this will just do well no matter what. And then you hit your 10% stop loss, which, by the way, is very much in the plan. That's part of the plan. That is what we're expecting. That is absolutely no problem. And all you have to do is just continue going by the plan. But now your emotions kick in and you hit your stop loss, and what's going to happen now is like, oh, okay, so I can just, continue with the plan, and, after 2 trades, I'll be back on track, and this was, expected and backtested, and it's part of the plan. I can do that. Or I can just do a riskier trade with more leverage, with more money, where I will make all my losses back immediately and then some, and that sounds more exciting. And then you do that. And guess what? Because it's a way more risky trade, more often than not, that risky trade is not going to work out. So now you didn't lose 10% of your account, which by the way is a lot anyways, like risking 10% per trade is a lot. Let's just assume you do. So now you didn't lose 10% of your account, you lost 40 or 50. And now you're like, oh damn, now it's pretty bad. I didn't follow the rules. What am I going to do now? If I just follow the rules now, it's going to take me another, X amount of days to come back to that amount. So like that's horrible. That just messes up my entire plan. So now I kind of have to risk more in order to get back, which by the way you don't. And you go into another trade, probably even riskier trade with probably even more leverage because you have less money to trade with. And then you blew your account and it's gone. And whereas you could have been trading amazing consistently for days, months, weeks, or even a year, and all you had to do was continue doing the same thing over and over. And if you hit a stop loss, you hit a stop loss. That's part of the plan. But the problem that happens is that you deviate from the plan and you mess it up. So that's the third pillar, which is mindset and emotional management. Because we're not here in order to gamble. And the only reason why you would ever revenge trade, that's what this is, revenge trading. The only reason why you would ever revenge trade is because you don't look at trading seriously enough. Because if this was a job and you were supposed to be professional, then you would never do something like that. If you are a car mechanic, you don't drive your car of the client down a cliff because you feel like it. That's the equivalent that you're doing here. Because you feel like it. Because of your emotional state, you do something. Which is the opposite of being professional. Literally the opposite of being professional. So see, this was a pretty good exit, by the way. So this is why it's very, very important to understand that all three pillars are needed, not just one of them. All three pillars are needed. The strategy, obviously, you need to have a strategy. Otherwise, you just out in the blue ocean, just floating around, waiting for a shark to eat you. Literally, what's going to happen. You need the risk management, because when you're in that water and you know what you're doing, you also need to know what's out there to get you and how to take advantage of it, rather than just trying to being exposed and getting eaten up by a larger shark or whale. And number 3 is having the emotional control and the right mindset in order to stay on track and not suscept to the emotional triggers that the market keeps giving you. If you do those 3 things, you will be consistent and you will be profitable. That's why bots, when you have bots, then you don't have to, like, the person that's doing the bot needs to have the mindset and the knowledge, right? But once that work is done, the beautiful part is that it's static. It's not going to change. So the one pillar is basically gone, and really what you're focusing on is the strategy and the risk management. And the mindset and the emotions don't really have to be there. So that's why it's good when we have our dashboards, when we have our scalping bots, then it will help you with that third pillar, with the emotional management pillar, which is probably, I'm pretty sure it is, that's the main pillar why people fail. Because it's also something that they don't look at, or they disregard. But the emotional pillar, the mindset pillar, is just as important as strategy and just as important as risk management. And people rank it usually a little bit lower. And that's the last thing to think about. But not really, because you will never get ahead if your emotions drag you right back where you were before. So that is something very, very important to note. So like in the past 40 minutes, we had this one trade, which was a good trade, by the way. We might have another that comes up, probably another short. We would have to look at the higher time frames. But the call has been going on for a while already. So what I might do is I might stop at least the recording on YouTube and maybe answer some questions for you guys. And maybe look at another trade, see what's going on. This should be live sending messages into the Porcupine group, into the Signal, so you can track those trades here as well. And for access to this scalper on TradingView, it will be by private invite. So just let me know that you want it, and everyone Porcupine and higher will get it. So yeah, that's all. Now we're just basically waiting for the next trade. But yeah, this is important. I mean, the strategy is there, right? This is pillar 1 is solved for you. Pillar 2, risk management, something we were talking about a lot and applied here as well. And then pillar 3 is the emotional management, which is very, very important, which is something that we'll be focusing on as well in the next coming days. So yeah, that's pretty much all from my side right now. Yeah, I'm gonna look at that long from Saifa. If you guys have any more questions, then let me know right now. Let me look at Lunacy right here. Let me just turn everything off. I can probably do 1,000 Lunacy. Is it 1,000 or? There we go. Longs, you said. Okay, so our higher time, our 15-minute is at the range here, 531, all topped out. So okay, might have some movement to the downside before we go further up. 30 is topped, but the 1, 2, 3, 4, 6. Okay, so your higher time frames are kind of helping you out. On the lower time frames, though, there might be some downside because they're all topped out and aligned here. So careful about that. If I had to set up a longer term long. So assuming that, Cypher, your idea is that the higher time frames are going to push this higher, which, was very reasonable, I would make sure that I have some layers and I have some stop losses at these levels where the 15-minute has been, oscillating around. So, that's all. That's the Luncy long here. Okay, perfect. So you got out with the long already. Okay, so you entered before here. Yeah, at that point, yeah, perfect long. Right now we're kind of getting to the close of it, but if you entered a bit earlier, then that's a good long. All right, yeah, that's all. I hope it made sense with the 3 pillars to consistency. And every single time, or every single trade, or where you try to think about trading and performance, think about the 3 pillars, which is strategy, mindset, or emotional maturity, really, and risk management. And when you need all 3, because if you lack on one, it will crumble back down. If you have all 3, then you will, and you execute it every single day, then the most rational outcome is your success. And the way your trades are going to be looking is that you will have trades that people will look at in your trade history, and they'll be like, how did you get those entries? How did you get these perfect trades? And really what it was just that you were positioning yourself to have an unfair advantage in the market every time. And as long as you do that consistently, you will have consistent, really good results, right? We're not trying to be the average Joe. We're not trying to, have a average performance, because by the way, an average performance in the market is actually very, very unprofitable. So we need to, by default, we need to be in the top 1% just to be break even, really. But we don't want to be break even. We want that the time and energy that we put in, has exponential benefits. That's the beauty in trading. So we need to be in the top 0.1%. And as we are in the top 0.1%, that means that we need to be in the top 10% of the top 1%. And how do we do that? We need to have an unfair advantage over those people. And how do we do that? We understand the 3 pillars, we understand the theory, all of the knowledge that we've been talking about. We use the strategies and the tools and the automations that we have available in order to do exactly this, and then we execute that every single day, while having the correct risk management, while having the correct strategy, while having the correct mindset. And all those 3 things together, you will see your performance explode. And I've seen that many times over. You will see the performance explode. And that is essentially how you will make money trading. It's not overcomplicated. It's not rocket science. I literally managed to explain it in the past 5 minutes. And that is it. Obviously, there's a lot of detail that goes into every single one of them. But, as long as, it's laid out to you to some extent, well, that's just the reality of it. And the main thing, the biggest point of failure that you can have, that can happen, is the fact that you do not stick to the plan. And you would not stick to the plan because of your emotional triggers, because of your emotional management. Revenge trading is probably the first thing that will take out accounts. Now we just had another short here. Revenge trading is the first thing that will take out your account completely. And then obviously, by the way, when we put a short here, we need to make sure that we put our stop loss above this level and we layer in above this level, because the fact or the chance that we will go towards this top is very, very high, or blow past that top as well. So we need to make sure that that's there, just in case. We're entering with a percentage of our account, but our layers need to be here. Just by the way. So yeah, revenge trading is what will blow your account, and whether you do or do not revenge trade, that is a question of emotional maturity and the professionalism that you are expecting of yourself in the market. And whether you look at trading as a hobby or an entertainment platform or a gambling platform, or a professional platform where you're expecting to make money every single day, or not, like, on a consistent basis at least. With the scalper, with enough trades every single day, yes. So that is very, very important, and I think that's what I'll leave you with today. As long as you guys have any questions, let me know. I'm here. I'm in the Discord. There's people that will help you out there as well. If you have any more personal questions or whatever, my DMs are open, so feel free to DM me. And yeah, that is all from my side, and I'll talk to you in the Discord.